Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Very excited for today's show. We have fifth time guest. I've lost count how many times,
Yeah,
but Joseph Bramante is with us today. So, Joseph, welcome.
good to be here. Good to be back again. Yeah, I've kind of lost track myself, but yeah, it's always good to be on the show. You have such a great podcast, and it's just great to be
Yeah.
back.
Thanks a lot. Yeah, about once a year is what you've come on. And for the listeners, Joseph was the reigning champion on the podcast for the most downloaded episode for like a 3-year run before somebody finally overtook him. But you still probably have one or two top 10 episodes here.
See if I can top it this time around. See if I still got some juice in me.
Let's see. Yeah, I'm excited for that. So, right now we're in 2026, the last couple years for anybody involved in multifamily and most commercial real estate's been difficult, but hate to start things out like that, but I'm gonna. So, what's going on in your life right now and what's going on in business?
So life's actually pretty good. Personal
Hmm.
life's good. Got married in February, and we were talking about that earlier, and it's been good. And it's been challenging because and like so many leaders out there,
Hmm.
your identity as is of yourself and your business are usually one, right?
Yeah.
And professionally, when things aren't going so well, it can be really hard to separate the two to like be,
Hmm.
okay, I got this personal stuff going on, and especially something big like a wedding, right? We
Yeah.
had a beautiful destination wedding in Colombia. We had 100
Hmm.
people show up, which we weren't expecting that many people to show up because we're thinking, destination weddings usually are pretty small. We almost lost everybody because the wedding was in February and all
Hmm.
that Venezuela stuff happened like January. We thought maybe we weren't going to be having a wedding.
Now, where in Colombia was it?
Medellin, Colombia.
Okay. It's far enough away from the Venezuelan border, but you still get
Mhm.
wrapped up in travel restrictions, all that fun stuff. Yeah.
Especially when I've got a lot of family that doesn't travel that much. And
Hmm.
so for some people, this was their first time leaving the country, and they don't realize that there's actually some distance between Venezuela and Colombia.
Yeah, 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 exactly. Cool. Well, congratulations on the wedding. I did see the pictures. That's awesome. You mentioned this before, and since we're talking personal stuff, I'm just going to throw this out. You told me you just got evicted. Tell us a little bit about that story. I think that'll be fun.
Yeah. Yeah, so it didn't just happen. We're actually just wrapping up. It happened
Yep.
like 2 years ago.
Okay.
And I was staying at this high-rise property in
Hmm.
Houston, big developer, real famous brand. I just split up with my ex, and
Hmm.
so we'd been together for a while. We lived in this unit for like 5 years. And so I was transferring out of that unit. I went to a unit upstairs, and she
Yep.
was just leaving the building.
Yep.
And so we do our move out and everything's clean. I even have my
Hmm.
own maintenance people come and clean it up for me. I move out and then I'm in my unit for like a week and
Hmm.
they send me this bill for like $10,000. And
Ooh.
I'm like, excuse me? And
Yeah.
they're like, oh yeah, you damaged all the cabinets. I was like, first of all, no, I didn't. I got photos. And
Hmm.
second of all, $8,000, I can replace every cabinet in that entire unit for that price. So I don't
Yeah.
know what's going on here. And the funny thing with those transfer agreements is it didn't exactly allow them, but they're saying it did because it
Hmm.
allows you to transfer credits. It
Yep.
doesn't say damages, but they inferred that you can do damages as well. So anyway, they
Hmm.
transferred the damages, and then when I didn't pay the damages on my new lease, they said, "Oh, non-payment of rent," because everybody knows the
Yeah.
first dollar of your rent goes to pay the balances
Previous
that you
stuff.
may owe.
Yep. Hmm.
So got evicted. I actually got evicted on my birthday, May 6th. I just couldn't believe it. So I've been on that side, right? I've
Yeah.
evicted, I don't know how many thousands of residents over the years.
Yeah.
And I've actually now myself been evicted and it really sucks. And it was really embarrassing. Fought it, got an attorney involved. They actually won the first two trials because technically they are correct. I didn't pay the rent because of these damages.
Hmm.
And so, but we got appealed and won, and I had another attorney countersue for wrongful damages and wrongful eviction,
Hmm.
and they've been delaying it for 2 years now, and the summary judgment is in April, and the jury trial is in May. So I'm looking forward to that. It might actually be the largest payout, if we win, right? Which I think we will, because they've not produced any
Hmm.
pictures, or they've gotten pictures, but no pictures that show any damage,
Yeah.
and no invoices, no proof of payment, no nothing that they actually, no photos of them doing any repairs.
Hmm.
So our attorneys and I are pretty, confident about going into it, but it
Yeah.
could be one of the largest wrongful eviction payouts. I'm going to research it once it happens, and I'll let you know, but I think we might be up there.
Yeah, well, good luck with that one. I mean, as an apartment owner, I mean, we go after people for damages, but it takes a whole lot of damage to hit that $10,000 mark. And you're right. I mean, you've probably replaced cabinets many more times than I have, but $10,000 gets you a lot more than cabinetry.
It was a big unit, but still,
Yeah.
ironically, I actually spoke with the owner of the company like
Hmm.
before all this went down and let him know. I was like, hey, I got this thing that's going on. Like your managers are really off here. Like,
Yeah.
let's just like, can you just settle this so this doesn't get ugly? And he said, oh yeah, yeah, sure. And then nothing, and here we are. So,
Still gets ugly. All right. Yeah, yeah. Well, good luck with that one. Kind of interesting turnabout of events, but
right.
yeah, I hope that works out for you. I've never been evicted. I have been stung with some unreasonable, damage fees on the back end, but the way I've always looked at that, that's the price of having 5 kids. Every time I've moved out, it's been like, yeah, you're right, that's broken. Yeah, you're right, that's broken too. Yep, that too. But all right. So besides the eviction wedding, so congratulations on one, good luck on the other. What else is going on business wise?
Business wise,
Yeah.
I think we're kind of like everybody else. We're just
Hmm.
we're surviving, just cleaning up the mess from the last couple years. We had a big refinance in February. February
Hmm.
was a huge month for me. I had this huge refinance, got
Yep.
married, so I kind of had the both ends of the spectrum were doing well.
Hmm.
And I think everybody got to experience how difficult loans can be, right? When you're
Hmm.
as rates go up, and you got to really know your lender very
Yeah.
well. And we did so many modifications across our portfolio, and some
Hmm.
tough lenders, firm lenders, but fair. We had
Yeah.
we negotiated some great modifications for both sides, right? Like we obviously
Hmm.
wanted a little bit more than what we got, and the lender
Yep.
did as well. But ultimately, it was a good negotiation, and everything worked out, and the deals are good.
Well, let's
We
dive
had
in on that one real quick. So, just to set the stage for people listening, values have gone down significantly in the last couple of years. Rents have gone down significantly in the couple of years, and expenses have kept on going up, right? So that puts a lot of people in a pinch. Even with like a 1.25 DSCR, you lose 10% of income and you add 10% to your expenses, you get into a bind really quick. So let's go back into that. You have a property that's struggling, you're having issues with the loan. What do you recommend? What's the first steps? How do you navigate that? Hmm.
early conversations. That
Hmm.
was one of the comments that we got from our lender. Was like, we're talking to them 6 months ahead of time. Like, hey,
Hmm.
this is about to happen. Like, we're already anticipating some challenges. Let's start talking about it now because lenders do not like surprises.
Right.
And also, they don't like negotiating in very short windows. They move slow, particularly on stuff like this. It's got to go all the way up to a committee a lot of times, and that requires a lot of conversations. So the more you can be proactive about it is better. Also, I think just from a negotiating perspective,
Hmm.
the earlier you can flag something, then the
Yep.
earlier you can bring it to the lender's attention, then you just kind of let time
Hmm.
negotiate also for you because now you've
Yeah.
both parties are feeling the weight of
Hmm.
what's to come. And so both parties are getting more and more willing to negotiate as you get closer to that deadline
Hmm.
versus like if you just wait to the last minute and you say, "Oh, by the way,
Yeah.
whatever, that's it. Nothing's going to happen.
Yeah.
It's too late, and the lender always has all the power anyway, and so you're just cooked, right?
Yeah.
Versus if you let them know ahead of time, gives both parties opportunity to let the pressure kind of build and negotiate and steer things into a better situation.
Yeah, awesome. So you start early, you start talking about what's going on. What types of things have you seen lenders willing to negotiate, and what things have lenders been, more or less, holding still on?
What I'm going to say is probably irrelevant for today because
Mhm.
we're in a
Yep.
different market, right?
Yeah. Yeah.
The things that you're able to negotiate were just as or were very relevant to the times,
Hmm.
because from the lender's perspective, they're looking at, hey, I don't have an exit either. Like nobody has a parachute here.
Yeah.
Whereas in today's market, the lender most likely has a parachute. And that's why you've seen maybe less of a willingness by lenders to negotiate with you because they know that push comes to shove that at least they're clear. But in situations like we were going through the last couple of years where both parties were in a losing situation,
Hmm.
we were negotiating stuff like we had loans that were amortizing and we stopped the amortization payment.
That's helpful.
We had loans where we had a rate cap expire. We couldn't afford to buy a new rate cap. So we negotiated with the lender to basically give us a hard and soft pay component. So we would pay a flat rate and they would accrue the delta for us. And then
Hmm.
they would charge us interest on that delta. And
Yeah.
so we did that for a couple years with one lender. And we did stuff like reallocating reserves and budgets and stuff like
Hmm.
that, which are harder to do. I mean, granted, sometimes and sometimes it's just a flat no. I don't think there's really any secret sauce to it. It's just asking a bunch of questions, and that's the other reason for starting early. Because the
Yeah.
earlier you start, the more time you get to think of all the different ways and creative ways you can come up with solutions. Versus if you don't give yourself enough time, then you might only see one avenue here. And
Yeah.
I think for us, and that was partly why I was because I didn't,
Hmm.
I didn't know the answer either. I
Yeah.
was just flagging it to the lender like, hey, I don't have an answer here or a solution, but in 6 months, we're going to have a problem.
Yeah.
And let's start talking about what all of our options are. And so the lender will come to you and say, hey, here's some of the things that we can do. And
Hmm.
then I was like, okay, cool. And then from there, you just start a conversation and you start spitballing off each other. And hopefully you find something that works for both
Hmm.
parties.
So you're talking about these loan modifications, that have happened in the past. Fast forward up till now, I mean, have the loan modifications ended up working for both parties? Have you gotten the results you've wanted? Did the lender get the results they wanted?
Yeah, I mean, we're still in some of these loans. We're working on exiting them all right now,
Hmm.
but everybody's alive and moving forward. We had to pay down some loans as well. I mean, we
Hmm.
did a fair amount of that.
Yep.
We've injected lots of equity into our deals, which is never fun, right? Money's been going the wrong direction
Yep.
for the last couple of years.
True.
But that's just what the market is. And these were all some of these were deals that we had bought, during COVID. It was just a product
Yeah.
of the times. We've gotten good results with them. I think we took lenders for granted
Hmm.
because up until the last couple of years, like the worst lender I had was during COVID, and
Hmm.
we had gotten into lockdown. We were doing a big renovation, and we couldn't. You remember, like you couldn't. Nobody could do anything. Like COVID had
Yeah.
just happened, and so everybody was just in lockdown. And we had like 30 units that were down for renovation on a
Hmm.
200 unit property. And everything up until then was going great. Like it was all on the business plan, but then
Hmm.
we had that vacancy. And then so our interest reserve, we just burned it up for like 6 months.
Hmm.
It was a frustrating thing because you go to the lender and we're like, hey, like there's nothing we can do here. And we're trying to come up with solutions. And they're like, we want to help. And then so I give them all these different options. They're like, yeah, we wish we could, but we can't. But we want to help you. And so it's very frustrating. I give them a solution or give an
Hmm.
option, and they would just bat down everything. So
Yeah.
everything was a no. But fortunately, we were able to exit out of that loan.
Hmm.
We got a new lender, and it worked out. But that was my worst experience. It was just like
Okay.
going through COVID, and we were able to get out. Luckily, rates were still zero back then. But lately, I mean, we went through this deal. It was a big, almost about a 400 unit deal. We're doing a big renovation on.
Hmm.
Not honestly, not that big of a renovation. The
Yeah.
rehab was like it was like 20,000 a door, kind of right down the fairway
Okay.
for us, kind of a
Yeah.
normal size rehab. And we got into this deal, and right out of the gate, something had happened prior to closing. We kind of should have known there was some issues there because we like 2 days before closing, they back out of the deal, and we're like, what's going on? So we make some phone calls. I'm actually at that time I was in
Yeah.
Greece on vacation because I'd already made the vacation and the closing
Yeah.
was supposed to be done deal. And then next thing I know, like they're backing out. So I'm like up to like 5 in the morning having this conversation. And anyway, we make calls and they go up to the top and people make phone calls and then they close.
Yeah.
Uh, but anyway, we close this deal and we submit our first draw for mobilization fee and to get going. And they're like, nope, we don't do mobilization payments. And we're
Yeah. I
like,
hate those.
but
Yeah.
we just had a kickoff dinner. You told all of us that you would do the mobilization payment. And that was 2 weeks
Hmm.
ago. What happened? And they're like, yeah, we no longer do that. We fought them over it, but we ended up just raising the money ourselves and we funded
Hmm.
it. So we thought
What was that first payment? What dollar
it's
amount did
like
that look like?
700K.
That's a good
It's
chunk.
a
I mean,
$7 million rehab.
yeah, yeah, you're doing larger rehabs than I am, but
Yeah. And all of that goes for deposits, right? Because
yeah,
when you're doing the exterior work, because we always start the exterior first, as you should, because
every
it's all about.
contractor wants a deposit. Yeah,
Yeah.
yeah,
And you're spending half a
hmm,
million dollars to paint the exterior of the property. And so they want
yeah,
250 down. And so anyway, we
yeah,
fund it and we start work on the interior draws and they take like 10 weeks on the first draw. And we're like, whoa, guys,
yeah,
like what's going on here. So it's fine. I mean, we figured just like an educational thing. There's always a little bit of friction the
Hmm.
first few draws, but just continued. We averaged about 8 weeks over an 18-month period for like 8 draws. And it
Yeah.
just shut down the project 3 times. We had to restaff it. It just led to all kinds of chaos. And they
Hmm.
just manufactured all these defaults on us, just screwing the whole project up.
Hmm.
Of course, they say they didn't do anything wrong. It was always justified. And I learned firsthand, there's this term in these loan docs called lender discretion. And, I always just kind of glossed over it. And, because
Hmm.
usually they all negotiate from good faith, right? And so
Yes.
you think like what's good for you is good for me and vice versa. So like, why would you not fund the draws? This is
Hmm.
stupid. Like you gave me the loan based on me performing this business plan where I said I was going to do
Hmm.
this many renovations, this many units. So, we were in agreement. Anyway, it defied logic and reason, and you just don't think
Yeah.
that lenders would do it, but they do.
They do.
And
Yeah.
for whatever reason, nobody really understands why they acted the way they did today.
Mhm.
But
I got some advice yesterday from somebody, and for people listening, go back and listen to the episode with Mark Kenny because he said the same thing. He said every time there's a lender discretion in a loan document, strike it out and get them to quantify it, but
yeah,
when they will. On our most recent value add, we had similar problems. They didn't fund the deposit. We had to come out of pocket 86,000, and I remember that number, but about 10% of our total number. And the first draw request took them, 6, 8 weeks, and our contractor was getting antsy. But after that, everything's been like clockwork. But to keep on doing that, that's painful. I mean, we,
yeah.
we sat through that pain for the first one or two draws, and then after that, it was, we submit a draw request, and probably a week later,
An
we
hour
get
with
the
a new lender, they fund
yeah.
our draws in 48 hours. And
Oh
we just,
man.
we're like, you've been beaten upside the head for so long.
Hmm.
It's like an abused dog or something. And
Yeah.
somebody goes to pet you and you just pull your teeth out. And now you're like, you forget that there are good lenders out there.
Yeah. We
Um,
we had a really good credit union in South Carolina, and they were fast funding the draws and very minimal amount of proof, send them pictures that it was done, and usually they're paying really quickly. But anyway, yeah, it can be painful.
yeah.
So do you still own
Um,
that property, or are you
We still
still?
own the property. I mean, that particular property, we swear that deal was built on an Indian burial ground because we were like dealing with this horrible lender. And then we just did this modification with them where they agreed to start funding draws on time. And part of that modification was we had to agree to sign recourse. It was a non-recourse loan. We didn't want to, but we were forced into basically signing recourse, but we're
Hmm.
promised like they would fund draws within 30 days, which is
Yeah.
still slow, but better than,
Yeah.
90. So we get going, and then 2 months after that modification, we got hit by the derecho storm and the barrel. We had 160 units go down on a
Hmm.
300 or 372 unit property. So it's a huge storm, a huge
Hmm.
event for us. And then we got our adjusters involved,
Hmm.
and the insurance came out. What the insurance tried to do is, so we had the first storm, and we had it passed. We had our adjusters out. We had the water control, we call it, where we go in and we dry out the units. So we'd already pulled all the wet sheetrock out and we're already
Yeah.
drying things up, had our logs going. And then 30 days later, the second storm hit,
Hmm.
and the insurance company submitted a claim for us on that second storm and then denied that claim on the second storm. And
Mm.
we're all like, what just happened? Like, we never
Yeah.
submitted a claim for this second storm. And what they tried doing was taking the damages between the two and spreading them, and so that they can stay below the deductible,
Hmm.
and that way they can and basically keep all
So
the
so you pay it all instead of
so
them.
that we
Yeah.
pay it all.
Man.
And no, that's not happening. So
Yeah.
we've got attorneys involved on that one, and so we're in mediation with that. So we'll see how all that plays out. But it's a several million-dollar, multi-million-dollar event. And
Yeah.
so you have all this happening and with like the worst lender possible, and you're just like, crap.
Hmm.
Any other lender, when we've done this before, is we go to them, you say, hey, look, I want to reallocate some of my budget. I want to get these
Yep.
units back online. And then when the insurance pays out, we'll then correct everything and we'll fill
Hmm.
you back up. And we tried making that same pitch to them, and they
Wouldn't
said
have.
they don't see how that improves their collateral. And so it's like, okay, They
Yeah.
said that's a borrower problem. And
Yeah.
so we raised money and we fixed it ourselves, which ended up kind of working out, I'd say, in some regards, because now that we had to raise the money, we fixed all the units. The insurance company does nothing to kind of come back to and re-inspect because it's
Hmm.
like we fixed everything, fixed the roofs, fixed all the, well, fixed most of the units. We left like the really heavy ones down. There's about 40 units that we couldn't get back up. They're $50,000 per unit, so we just
Yeah.
left them. But I know a lot of some of my mentors in the space, like that's what they do. Like they don't when an event happens, one, they're flush with cash. So when a
Hmm.
storm event happens, they just go and they fix it. And then they get all the paperwork for the claim, submit everything, and they fix it and they move on. And it's a better way to do things if you're able to.
If you're able to, if you're able
Yeah.
to. Now, just curious, every time we renew insurance policies, there's always the deductible versus the premium, and higher deductible comes with lower premium and vice versa. Where do you guys like to land on that one? Do you like to have a lower premium, higher deductible, or vice versa?
Well, a lot of times the lender is going to dictate that to you, so you don't
Right.
really
They'll
get to
have
choose.
minimums, right? So,
Right.
yeah.
And so for us, I mean, we're usually right in line with the lender.
Okay.
And then also the other caveat to that is you've got named storm versus non-named storm. For us in
Right.
hurricane, hurricanes are named
Hurricane.
storms and
Yeah.
they are much different, much bigger deductibles.
We got hit with one, and it's one of these things that you don't realize you want to look at this until you have to look at it. But we had one property where a named storm came through and did a lot of damage. And what we didn't realize is each building was insured separately, and
Hmm.
each building had its own deductible. And when push came to shove, it wasn't that bad. I mean, we didn't get hit that bad. We had $100,000 worth of work. The insurance company, with all of our deductibles applied, was only going to give us like 20,000 bucks, But anyway, speaking of lenders, I mentioned I had a really good lender where we still this was with one of the good lenders where we still had construction reserves or renovation reserves, and they used our renovation reserves to pay for everything else.
What a thought, what an
Oh.
idea.
Yeah, it's like, hey, do we still have money? And we had done all of our renovations. We had under budgeted, and we still had money in that pot. And I called the POC on the loan, and I'm like, how much do we still have there? He gave me the number. I'm like, the hurricane just tore our roof off. Can we use those funds for a roof? He's like, yeah, you can use those funds for a roof, even though it was a hurricane. He's like, yep, even though it was a hurricane. Anyway, they're a very small lender, and sometimes I think that the bigger the lending shop or the bigger the organization you get, the less willing they are to play ball with you. That's my
Yeah.
take on it.
I
So,
mean, I'll tell you, we're in the middle like doing some new deals and
mhm.
we're actually getting references on lenders now. I want to talk to
Yeah.
some borrowers you had during this period and how you were to deal
Mhm.
with because yeah, you just get burned. And there's what's in the documents and
Yep.
then there's who the lender is at the end of the day.
True.
And it's like because they don't I mean, of course you hope they follow the rules in the document, but if they don't, what are you gonna they're huge, and
Yeah.
usually you're the small man on the totem pole. So you really want to get references and have lenders that are good lenders to work with.
Yeah. Something I've been doing, I mean, we've used a lot of loan brokers in the past. Eventually, I want to get away from loan brokers. I want to have my own in-house guy that's his job. But I've actually been giving feedback 6 months, 12 months later to the loan brokers and just say, hey, these guys are terrible. These guys
Yeah.
are awesome. That way, the loan brokers have that information because I think, most loan brokers know how easy or hard it is to work with somebody up till closing, and then they disconnect, right? It started out with a lender that I didn't like, and hey,
Hmm.
these guys are terrible. But now I'm trying to do it on every one and just say, hey, look, after closing, everything's been really smooth. They're really easy to work with. Or if they're not easy to work with, I'll give them the examples. These are the things we've been having problems with.
There
Um,
really ought to be some sort of like website that's got all these lenders listed and people and borrowers and
right.
it's like leave reviews,
Yeah.
and hopefully people leave good reviews,
Hmm.
meaning like
Yeah.
seldom, usually you only leave a review when like something bad
You're
happens.
pissed off or
Uh,
somebody asks you. Yeah.
So hopefully people would leave a review like when good things
Mhm.
happen, because man, that would be really useful.
Yeah. So I'll just say it out loud. Greenville Federal Credit Union in Greenville, South Carolina, they've been amazing. They really have throughout the entire process, but they have a very, very narrow range. But you're right. I mean, when you put these reviews up, it's like the same on your properties. When somebody's
Yeah.
pissed off,
Yeah.
that's when they put the review. And so, like every one of my properties has either 1-star reviews or 5-star reviews and nothing in between. So that should tell you something.
Yeah. You get 5-star reviews?
When we ask, yes, when we ask.
Yeah, I'll just kidding. Yeah, no, it just seems like it's just our team does a good job getting 5-star reviews as well. One of our metrics is the Google reviews. So our
Mhm.
whole portfolio is over 4 stars because, people look at that stuff. I think it's
Yeah,
an important metric, but
yeah,
yeah, it's hard to get those 5 stars.
yeah. And we found out recently that it is possible to get some of the 1-stars removed. We had one case where 3 people put negative reviews about the same thing. You
Hmm.
only have one tenant, right? Only one person signed on the lease. But anyway, long story short, we were able to get 2 of them removed because they weren't actual customers.
There's that, and there's several ways to get them
Yeah.
removed. So,
Yeah. So
you know,
anyway, yeah,
we'll
the
see.
review thing's fun. We have things set up where we're not tracking that on a normal basis, but we do have some automation set up. Whenever a review happens, it triggers something and we look at it and we respond. But
Are you
yeah,
responding, or do you have an AI pre-drafting and responding?
it's one of the partners on the deal.
Hmm.
So, it's syndication. We brought in a couple people that were quote unquote capital raisers and it's just one of the jobs we assigned, to one of the people. And I mean, every time they get a review, they're sending me an email and we'll make sure that we respond to everything too. And that's the other thing we're doing. We respond to every single one of them, positive or negative.
Yeah, you got to respond.
Yeah.
People got to see that you're there. You're gonna that if somebody puts some crap on your page, like you're
Yeah.
gonna respond to it.
Yeah. And if it's factually inaccurate, most of the time, you can figure out who it is pretty quickly. But if it's factually inaccurate, we'll try to get them to take it down.
You
Uh,
can usually figure it out, and
yeah.
it's just strange how usually there's a weird correlation between people leaving negative reviews and them owing you money. It's just it's just
Oh,
weird.
it so is. It so is. Yeah. Eviction, people who get evicted, usually
Yeah,
because they owe you money. But yeah,
yeah.
people who are getting evicted are usually going to give you trash reviews.
I don't know about your portfolio, but
Mhm.
the delinquency's been through the roof. I mean, it's
Mhm.
just the amount of fraud applications we get. I mean, we just switched to
Oh,
this screening called Snapped,
okay.
and a lot of people are using it. It's supposed to be really good. I'll let you know.
Okay.
We just changed from what we were using, but it's just crazy, Like the
Yeah.
AI is make it has good and bad, right? And now it's made it so easy for people to put in fake
Mhm.
applications, fake
Yeah.
bank statements, fake pay stubs, all that stuff.
So our property manager, they are still manually verifying that stuff.
That's not good enough. That's telling you that doesn't work
Yeah.
with the fraud with what they got these days. It
Yeah.
also depends on your properties too, because we got some where there's no problem. I guess
Mhm.
because people aren't trying to sneak into that one. But
Yeah.
our nicer properties, we find there's a lot of fraud. People are like trying to,
Yeah.
fake things just to get in.
Yeah, we're on the borderline between C and B class. So, we'll buy C plus B minus. We've had some for like fraudulent proof of income statements. And in most cases, we've been able to, property manager's been able to make a phone call and, verify it false. But are you guys using like what are you guys doing for security deposits, for example? Like my property manager has this system where they enter everything and it spits out a number. Is that what you guys are doing, or are you guys doing something else with those?
It varies per
Okay.
property, but generally it's just a flat rate per
Hmm.
uh depending if it's 1, 2, or 3 bedroom, the
Hmm.
deposit will be like two, $300 or $400, something like that.
Yeah.
And then depending on what their numbers come back at on the qualification,
Hmm.
we'll then have either like a high risk fee or we'll have some double deposits or something like that.
Yeah. Well, I mean, I've started noticing a trend. I mean, you mentioned there's a high correlation between people who owe you money and bad reviews. There's also a high correlation between low security deposits and skips.
Hmm.
So had this system that weighs the risk come back and say you only need to collect a $200 deposit from these guys, and then 3 months later they skip. You know,
Yeah.
$200 isn't enough for them to stay and
One
do
of the
things
things
right here.
that, I mean, if you're able to try looking at increasing your income requirement to like
Mhm.
3 times
Yep.
instead of 2.5. So,
We do 3x on ours. Yeah.
yeah.
So Salt Lake City, we've
You could
got
also look at applying the discount
Hmm.
to the second month.
Yeah, we'll split discount a lot of times between first and second. But yeah, that's something we do. But Salt Lake, fortunately, they have a really high income to rent ratio. So usually getting the 3x isn't that hard. But yeah, lots of things there. Well, geez, we've been talking for a good, 40, 45 minutes. So we should probably close this up. So last three questions that I always ask. First one, what's next for you?
So for us, we are just cleaning out the roster with the deals that we've had that kind of got backlogged. We got a couple of developments that we're all breaking ground this year.
Hmm.
And so we're getting those going, doing a little bit of mentoring for some people trying to break in the industry, which is it's
Hmm.
fun. I like doing that. You get
Good.
to see, it just kind of reminds you of that spark you used to have, that
Mhm.
naivety, people coming in. Like I had a guy it's so proud of this underwriting model that he built over the last 2 years. And I was like, look, dude, it doesn't matter right now. People have AI. I don't care
Yeah.
how good your model is. AI is better.
Yeah.
So, I mean, and the other benefit is in this market, anybody's going to make money. You buy anything right now, you're going to make money on it. It doesn't matter. It's
Mhm.
like in when I
Yeah.
started, but my first deal in 2011,
Hmm.
my underwriting was terrible. It was
Hard to
absolutely
lose.
horrible. I was
Yeah.
awful on everything. And it didn't matter because I bought it at a 14 cap and I was
Mhm.
fine. And I
Yeah.
sold it for a 5 cap. So like you just can't lose. And that's why I was like, you just need to buy something and get something in for a good basis.
Yeah.
But anyway, so we're doing a little bit of mentoring, but mostly just trying to get our raises in and automate a lot of things at our company.
Awesome. Yeah, automation. That's one that we're really working on too. So, all right. Next to last question. If you had to give advice to somebody who's just starting out, what would that advice be?
Yeah, so if they're starting out in today's world,
Hmm.
I would say just get in the market, learn AI, learn the industry, and go to some events because,
Hmm.
one of the things I was telling to this mentee is there's a lot of good deals out there. And
Hmm.
unfortunately, a lot of us, like myself and others, we're so busy still just restructuring our portfolio from the 5 years that we just went through
Yeah.
that we just don't really have a chance to go after all these deals.
Yeah.
But you give it another 6 to 12 months when we're all back at it,
Yeah.
it's going to be gangbusters again. So I was like, you
Hmm.
better get after it now while we're a bit distracted, if you will, and get it while the going's hot and raise, a lot
Hmm.
of new equities coming into the market, which is good.
Hmm.
There's a lot of equity that's never coming back to the market. It just got burned
Yeah.
and totally understand that.
Happens every down cycle, every time people lose. So,
Yeah. I
yeah.
would say it's like
Hmm.
when there's blood in the streets, even when it's your own blood, you need to get back in there. It's like when you're playing sports, if you get injured or something, we've all played hurt right now. We got to play hurt.
Yeah. We're playing hurt. Everybody's playing hurt right now. So,
Hmm.
yeah, I'm glad you're saying that because a lot of people don't want to talk about it, and that's something I've seen recently. You actually responded to my LinkedIn post where I said, out of the last 25 people we've asked to come on the podcast, we've only got like two or three yeses, but glad to have you on. Anyway, last question for you is how can listeners learn more about you?
Yeah, the easiest way, go to our website, triarchrp.com,
Okay.
or just go to josephbramante.com and it'll take you to the website as well.
Okay.
We actually just finished redoing it. There's a bunch of great content on there. We've got this education hub for investors, which
Mhm.
has like 20 some odd videos. And you
Mhm.
remember from the different passive investing,
Yeah. The
we used to
conferences.
host that
Yeah.
passive investor conference. And so I went through the couple years that I hosted it and I
Mhm.
grabbed the very best courses out of it. And it's
Yeah.
on the website for free for people to watch. And because right now we just really want people to get some education, especially after what we've gone through. I mean, you gotta know what you're getting into.
Yeah. Yeah. And the hope for everybody is that they remember the lessons they're learning right now. So, next
Mhm.
time, 10, 12, 15 years from now, whenever it happens again, we're all positioned a lot better. But
Yeah.
well, thanks for coming on the show again. And for people listening, the links that he mentioned, we're going to put those in the show notes. So if you're interested in learning more about the amazing Joseph Bramante, click
Oh,
one of those
too kind.
links. Thanks for coming on again.
Hey, thanks, Brian.